What is up, Steve here? I hope you are doing well. The luxury real estate market is taking a hit. I heard from a good amount of people here locally in Southwest Florida, especially in the Naples market, that the luxury market is not going to be affected because people have all these millions and millions of dollars and the money will never run dry. But guess what? It's starting to run dry and it is showing right now. And I want to show you guys this article. We're going to go through it and I'll give you some of my thoughts on it as well. Sales of luxury homes tumbled 17.8% year over year during the 3 months ending in April 30th. The largest drop since the onset of the pandemic sent shockwaves through the housing market. Sales of non-luxury homes fell 5.4%. That's a huge swing. We're talking 17.8% for the luxury market, 5.4% for the standard average everyday home. The analysis divides all residential properties into price tiers based on Redfin estimates of homes market values and define luxury homes as the most expensive 5% of homes in each metro area. The luxury market is cooling as soaring interest rates, a tepid stock market, inflation, and economic certainty, maybe economic uncertainty, put a damper on demand. For a luxury buyer, a higher mortgage rate can mean a monthly housing bill that's thousands of dollars more expensive. Talking to one of our real estate agents in our office recently, they had a property that they were in contract at, I think it was $1.5 million. And sure enough, after the buyers got into contract, they started running all the numbers with their lender. And sure enough, they just got too nervous about the high rates. And also, you got to understand, a lot of these jumbo loans, they're usually adjustable in many cases. So a lot of people are just freaked out because who knows where mortgage interest rates are going to be in 2 years, 5 years down the road, especially with the Fed rate trying to combat inflation and raising the Fed rate. That's only going to jack up mortgage interest rates. So I think a lot of people are getting a little nervous about taking on debt through an adjustable rate jumbo mortgage. Now, the person that's got money in the bank and they're paying cash for these, I think people are sitting on the sidelines as well, just like myself. I mean, I'm not actually sitting on the sidelines. I'm making offers, but I'm making offers hundreds of thousands of dollars below what they're asking because I think that we're going to have a leg up and we're starting to see some of the luxury housing market start to sit on the market even longer as well. So, and that's here in Southwest Florida. The pool of people qualified to purchase luxury properties is shrinking because the stock market is falling and mortgage rates are rising. I mean, a lot of people are losing wealth, have lost a lot of wealth in the stock market, crypto markets as well. And I think that is taking an effect on people, especially the luxury housing markets that are for second homes, especially here in Southwest Florida. We have a lot of second home buyers. And, people are just looking at it. Do they need the second home after they just lost maybe hundreds of thousands or millions of dollars in the stock market? Do they now need this second home? And I think a lot of people are opting out on that too. The good news for buyers is the market is becoming more balanced and competition is easing up. Mortgage rates for jumbo loans, the type most luxury borrowers use, have also been surging. The rate on a 30-year jumbo loan was 5.06% as of June 8th, up from 3.23% at the end of 2021. And I bet that rate is based on an adjustable rate where that mortgage might adjust in 5 years or 7 years, which is just not a safe loan to have. Goes on to say, I had one seller in Delray who went under contract on their home for over $2 million in March, right in the middle of an interest rate hike, said Fleck. The buyers backed out because they realized their mortgage payment would rise by more than $3,000 per month with the higher interest rate. They can no longer afford the house comfortably. The median sales price of luxury homes rose 19.8% year over year to $1.15 million during the 3 months ending April 30th, roughly the same growth rate as non-luxury homes. Guys, we're seeing this in many articles. We're seeing this on now mainstream media actually coming out. They're getting on the bandwagon, stuff that we've been talking about, 8-10 months ago on this channel, that it is coming. It is coming. Mortgage rates are going up. The economy is starting to become in shambles. The fuel prices are insane. Cost of inflation, or the cost of everyday goods due to inflation, is just crazy. CPI index, I did a video on this last week that came out. It just went up to 8.6%. Other economists like Peter Schiff are saying that real inflation is 15 to 18 to 20%, which I agree. I mean, if you're looking at renting a property or your grocery bill, are you telling me that things only went up 8.6%? I don't think so. So a lot of people are being squeezed. A lot of wealthy Americans are being squeezed as well. People that are millionaires, they're smart with their money as well. So they're seeing the writing on the wall as well. So a lot of people are just backing up. And I think that there's a lot to come in the housing market. And I did another video on preparing for a housing market crash, and basically the amount of opportunity that's going to be there for individuals like us, where we can go in and start buying some distressed assets. And I think a lot of people are going to become very, very wealthy in this new market when it comes. And unfortunately, the people who are not prepared are really just going to be underwater, drowning. And that's why it's important to prepare now, get out of consumer debt, get your stuff together now, in order for you guys to thrive in this new market that's coming. So take a look at that video next, and I'll see you guys over there. Thanks a lot.